The US dollar opened the new trading week on the downside. The forex market is trading steadily in anticipation of inflation data in the United States. At the same time, the dollar-yen pair is rushing up to 160, and the Chinese yuan weakened to a 7-month low. Moreover, experts have detected a capital flight from Chinese stocks. After months of waiting, investors' patience has been exhausted. Some of the foreigners who returned to the Chinese market at the beginning of this year eventually decided to sell stocks and have already withdrawn assets worth about 33 billion yuan from the country. The mainland yuan has already plunged by 2.2% against the US dollar this year. Additional stimulus measures, mainly taken by Beijing to rescue the ailing real estate sector, convinced overseas investors for some time. However, the vast outflow of cash from the mainland proves that investors are losing trust in the strong performance of Chinese stocks. By the way, the Japanese yen has also been trading on expectations for a long time. Moreover, Japan's authorities make plunges almost daily and thereby devalue themselves. In turn, these futile pledges weaken the yen. The monetary authorities are ready, if necessary, to intervene on forex to rescue the national currency. However, the Bank of Japan has not shown any intention to tighten its monetary policy as soon as possible to support the yen. Therefore, it collapsed to its 34-year low against the US dollar and fell just short of the 160 mark. Today, chief currency diplomat of the Ministry of Finance, Masato Kanda, said that the authorities will take appropriate steps in a case of extreme volatility of the Japanese yen. Since the threat of intervention is not just empty words, the yen has strengthened slightly, but overall the Japanese currency remains very fragile. Meanwhile, the US dollar strengthened again, and this time in the light of strong data on business activity in the United States. The manufacturing PMI inched up by only 0.2 points. However, analysts had expected it to fall to 51.2, and similar indicators published in Europe on the same day, on the contrary, went down significantly. No wonder, based on this difference between expectations and reality, the US dollar strengthened its position and rose to 2-month highs. The US PMIs looked at the growth, serving as the arguments for the US Central Bank to maintain high interest rates for a longer period. On this optimistic outlook, the US dollar index climbed to 106 points on a Friday, its highest level since early May. In the first half of Monday, the price of the US dollar relative to its counterparts in a basket of currencies entered a consolidation phase within the daily range of 105.60 to 105.90. Meanwhile, US stock index futures opened the week with mixed dynamics. After hitting a new all-time high last Tuesday, the S&P 500 fell into a sell-off today as investors took some gains in artificial intelligence stocks. The benchmark index, in anticipation of a new catalyst, consolidated within the daily range of 5,452 to 5,478 points. Since there is a little macroeconomic news in the last week of the month, the market focuses on the political news, which now serves as a market catalyst. Besides, investors are still evaluating the prospects for the monetary policy of global regulators. After the Swiss National Bank cut the interest rate, the Bank of England also expressed its readiness to soften monetary policy soon. And this week there will be statements from the regulators in Sweden and Turkey. But their decisions, of course, will not radically change market sentiment on forex. The share of the Swedish krona in the dollar index shrank to only 4.2%. Meanwhile, the Turkish lira is plumbing the depths of its weakness. As of April 1st, the Turkish currency had already sunk by 9% versus the greenback. The lira, after the Chilean peso, became the second weakest among the currencies of emerging markets. Meanwhile, the European currency is also under pressure from the firm greenback. The euro-dollar pair closed last week below 1.07. According to our experts, this cemented the bearish sentiment among market participants. At the same time, no radical changes were observed either, and volatility on forex remained average. In the case of a further weakening of the euro, the odds are that the euro-dollar pair will test the low of the year. But today, the main currency pair is likely to trade inside the intraday corridor between 1.0665 and 1.0760. The instrument has to break below the corridor and gain a foothold in a new bearish zone. If the opposite scenario develops, the downward trend will be interrupted and the price will again consolidate above the level of 1.0700 at the end of the day. In this case, the euro might resume the cycle of fluctuations in the range of 1.0700 and 1.0760. Today, two factors at once, economic and political, hampered the advance of the European currency. First, the euro's upside potential has been limited for some time due to uncertainty about the results of the snap elections in France. The first stage will take place at the end of this week on June 30. Fears that the new government could worsen the financial situation in the Eurozone's second-largest economy are undermining the single currency's credibility. And secondly, the euro missed its chance to strengthen on a consolidation due to the report on the German business climate. The IFO index did not live up to expectations of a growth to 87.9 points, but also fell below the previous indicator to 88.6 points. The weaker than expected data waned on the single currency and dampened its growth momentum. Interestingly, gold started the new week also consolidating in a narrow range of $2,329 to $2,345 per troy ounce. In the previous sessions, its price lost more than 1% amid the advance in US dollar and a rise in US Treasury yields. In addition, official data showed that Swiss gold exports fell in May due to the reduced supplies to India and Hong Kong. Moreover, demand for the gold in India, the world's second-largest consumer of gold, slowed last week. Oil prices also retreated slightly at the end of last week. Today, Brent crude is trading higher in the intraday corridor from $84 to $86 per barrel. Most likely nothing will change until tomorrow's publication of data from the American Petroleum Institute. The data on US oil inventories had the greatest impact on oil prices over the past week. There are no signs of a change in this trend. Moreover, the macroeconomic calendar is practically empty for the whole week. So, only unexpected news regarding auctions by OPEC and its allies will be able to set the market in motion. In addition, the commodity market continues to be supported by troubling geopolitical news. However, recent reports indicate a decline in the US crude oil inventories amid the recovery in energy consumption. Against the backdrop of all these factors, Brent oil futures are showing an upward trend, and this is confirmed by the price stabilization above $85 per barrel. Moreover, our experts admit a further increase in oil prices due to the inertia. Moreover, speculators are poised to ignore technical signals today that the asset is overbought. You have watched a review of global financial markets for today, June 24. Keep close tabs on the global markets on the InstaForex TV channel. Feel free to leave your comments. Our experts are always ready to answer all your questions. Thank you for watching and see you online tomorrow!